Well, the AI boom goes well beyond the so-called Magnificent Seven because there's a big physical build-out with data centers that are providing the power for the adoption of artificial intelligence. How do you invest in that area? Our next guest has 3 ETFs that are tied to that theme. Mike Philbrick is CEO of Resolve Asset Management and joins us now to talk a little bit more. Obviously, this is a huge theme, Mike, and I guess for investors who are trying to figure out how to play the sector, sometimes you can look at individual stocks, sometimes you can look at groupings of stocks. So when you started to do a little bit of ETF analysis on this trend, what did you come back with?
Well, a couple of things. One is that we have an S-curve of adoption from the perspective of technology, but that meets 2 J-curves, where first you get the dip, then you get the rip. And that's human organization. So companies need to reshape policies and workflows and oversight to integrate AI, and that's going to slow some of that tech adoption. The second is resources. Everything in AI has a physical manifestation. So when we think about that, and we think about the shift in Fed policy to worrying less about transitory inflation and more about job loss, then we have a tailwind from Fed policy as well. And when you think through that, you need to get those resource stocks in your portfolio and those stocks that provide energy for the AI boom.
Okay.
So that's what the 3 picks are focused on today.
All right, let's go through them. Why don't you walk us through some of the ETFs that sort of fit into this bucket for you, if you will?
Right. The first is the iShares S&P Completion Index ETF. This is the small and mid-cap exposure that we need. Outside of the TSX 60, outside of the Mag 7, what we see is breadth is improving, the cyclical tilting towards domestic cyclicals, and this is resource-focused, industrial-focused, and smaller financially focused, directly tied to the CapEx and commodity cycles. So this is going to diversify your mega cap dominance. It's going to add that domestic growth torque. It is a little bit more volatile, but I think that's what we want here. And it's the other 200 companies in Canada. I think breadth beats brilliance at this time in the cycle. So you want a big swath of these things to complement those large cap names that are in the portfolio already.
Okay, and you also talked about having exposure to things like commodities, base metals.
Correct, and that's the next pick. XBM, iShares Global Base Metals Index ETF. That's the global producers of copper, nickel, aluminum. And AI isn't just code. It's built in data centers, EVs, grids, renewables, all of that metal-intensive industry. And so you think about copper as the new oil in the electrification and reindustrialization and grid expansion. And we've got a multi-year demand cycle here. So we want direct exposure in that commodity developed area. And these are cyclical commodities, again, a little bit more volatile, but very complementary. And this is what's shaping the physical world that AI is built on. Copper is the new oil.
And you can come up with whatever description uranium is the new whatever on, because, that's been another big hot topic and feeds into this conversation as well. I was just looking at Cameco as an example. I mean, it's up 48% this year. But when you're looking for sector exposure, how did you go about that analysis?
Right. So the Horizons Global Uranium Index ETF, HURA, H-U-R-A, that focuses on not only the miners, but also the yellow cake itself. So you get both the large cap miners, the small cap miners, and a bit of the yellow cake. And as we go through this build out of these data centers, we're going to need more base load power, more power that's round the clock. And nuclear is the only scalable carbon-free option there. So you've got utilities recontracting, you've got a sopping up of what has been excess capacity. You look at last year's Constellation Energy Microsoft deal and repurchasing the 3 Mile Island. So now you've got to build out the energy that goes along with the AI and the resources. So this to me represents an opportunity to get that baseload power, and you're starting to see that small modular reactors being built. You're starting to see that administrative clearance of the regulatory hurdles in the US to get that done. So power is the new platform, and nuclear is the base load power behind AI.
Mike, great to get your perspective. Thanks so much. Appreciate it.
Thank you.
Mike Philbrick of Resolve Asset Management.